Hey, Scott, thank you for the intro. And hello, Jamie, my fellow Texan.
Hello, Andy, Scott, what's happening? It is Thursday, and boy, the week has just flown by.
It has, it has. Looking forward to seeing you tomorrow.
This is true.
It's
We
been a long
shall
time.
all,
It's been a year,
all
I believe.
congregate. We will all congregate at the summit. Should be a great time. I'm really looking forward to getting out of this cold, rainy weather, Andy, and getting to the sunny California. So it should
Yeah,
be really nice for the whole
that's
summit.
what I hear.
Mhm.
Yeah, great. All right, everybody, thank you so much for joining us today. I see a lot of regulars in there. Hello, hi, Mike C. How you doing? Yes, thank you for taking time out of your day and coming here. And we're gonna get started right now. And before we do, let's go over the disclaimer. Guys, we're going to be talking a lot of stuff in here, but anything that you hear or see should not be construed as investment advice. All right, we're going to be having fun and sharing insights. But once again, guys, if you're looking for investment advice, seek out somebody who's registered in that capacity, like a broker or an RIA. So let's move on. Excuse me, guys. We are all full on the live attendance to the Trade Ideas Summit 2018, but that doesn't mean you have to miss out, okay? We do have live streaming that's going to be available. You have to register to watch this, and where you want to go is down at the bottom where you see that trade-ideas.com/live stream. Go there so you won't miss out, all right? It's a great lineup. You can see it on the right side there. Uh, I'm not going to go through everybody because I'm sure most of you can read. But anyway, it's a great lineup. You want to catch this, and you can do so on the live stream. All right, for those who are in here, and I've noticed we've been seeing a lot of new people come in, kick tires, probably because of the Brokerage Plus is about to come out of beta. They want to hear more about trade ideas. It's very powerful, we know that, but we also know it's very intuitive once you learn the basics. And that's what we're here to do, is to provide you with the support, education, and training that you're going to need to really, get a good grasp of this software. And you're going to find out, just spending about a week with us, at the end of that week, you are going to have a nice firm grasp of it. And the way we're going to do that is we're going to inundate you with webinars every Monday, Tuesday, Wednesday, and Thursday, all in the same time slot, this 5 p.m. time slot. You can see the lineup there. It's a mixed bag of myself, Jamie, Steve Gomez, and then we throw Dan and Brad Williams at you on Wednesday. And of course, we got the traders room with Barry. Barry's a professional trader. You get to look over his shoulder while he uses the software. That is free for everybody. And not only that, after the first couple of hours of trading, Barry's really good about, answering questions. He likes to help people out. So, gosh, we don't stop there either. Look at the Friday support session. Although Scott will correct me if I'm wrong, but I think we will not be having one tomorrow, guys, because everybody is like flying out to San Diego. But normally, every 11 a.m. Eastern time, we have a 3-hour support session for you. It's a Q&A where you guys can come in, ask any questions you want. It's an open forum, and it's a great place to get more questions answered that you don't get during the week. And what we also have now is training. Well, I shouldn't say now, it's been around for a while. We have what's training, it's TI University. And we have class scheduled. 101 starts on Monday, okay? It runs through Thursday, and you finish up with 401, which Jamie conducted today, on Thursday. These are an hour and a half long, about an hour's worth of curriculum, another 30 minutes of Q&A. This took over our 101 session about 8 months ago, and it's been doing great. People love it. They're getting so much information from this TI University. If you miss it, it's okay. You can register at any time, but you have to register. All right. Let's go over the Brokerage Plus IB that's going to be coming out of beta soon. And what does that mean for you? Anybody out there who is kicking the tires and thinking they may want to auto trade? Maybe they want to auto trade Holly. It's going to open up at the first part of next year. You're going to have to get premium, or you're going to have to pay the price down the road. Okay, I'm just telling you right now. I don't know if a date has been set. I think there's maybe has been one set between us, but we haven't announced it yet. I'm not sure. But anyway, just get it. Don't even hold back. All right. If you're wanting to get it before the price goes, way up, you're gonna jump on it now. Okay. You want more information about that? Go to trade-ideas.com/beta. All right, look at the agenda for today. We're going to talk about the market recap, and I'm going to give you some insight on why it may be different this time. And I'm going to take you back to a discussion that I showed you guys probably about 2 months ago. We're going to revisit a top list that I showed you about the global markets. And why don't I just wait until that segment? And then we're going to talk about the Holly recap. Nice short bias today, and this is where we say this is where you're going to get your value. The unemotional Holly is not thinking about what no preconceived notions in Holly. Okay. All right. So, and she had a short bias today, and this is where we can learn from Holly. And then I'm going to talk about chance favoring the prepared mind and how you might go about your pre-market homework and look for not so much having preconceived motion, but it's a way to be prepared, and we're going to talk about how you can do that. I think it's going to be very helpful to you guys, especially the new traders. All right, let me back out of this. I think that's all the slides I need to go over right now, and we will pull up the spiders and kind of dissect what we're seeing right here. All right, guys. Well, I mentioned last week, I've been mentioning pretty much all year that I've never been that crazy about this market. I mean, yes, it was hitting all-time highs a few months ago, and it was doing it, and you're not going to fight the tape, never fight the tape. But at the same time, I just did not feel the risk reward was there on a longer term time frame just because of some of the stuff I was seeing. But let's talk about where we are now. You can see we came crashing through about 5 days ago through this 200 moving average on huge volume, and we bounced to this pivot line that's been drawn forever. And also you had a downward sharp, a very sharp down 10-period moving average forcing the action. That's what happened today. You can see it if I zoom in. Look at there, just basically 10 finally comes down. It touches, pretty much the high of the day, and you saw what happened with the action. Not crazy volume today, but at the same time, we weren't breaking through any new lows or anything, so I don't expect, huge volume. Maybe if we sell off a few more days, get down here, it will increase, but still, stronger than the up volume that we had. And that needs to be paying attention to. But what I really wanted to show you guys this market, I mean, obviously we're broken. I'm not going to hold back any punches. I mean, it's I got my brother has been texting me now for the last 4 days or 5 whatever days. Hey, time to get back in. Time to get back in. I'm like, no. Oh, I hate that. You can't win that's because you give them.
JC Parrott's made some comment regarding, well, when my mom or my grandma call me and ask me what they should do, well, then that's the time, right?
Yeah, exactly. Oh yeah, I hate that. Yeah, but anyway, what I wanted to bring over, well, actually I'm gonna have to pull. I thought I had to pull. Yeah, I do. I have it right here. All right, guys, this is what I pulled up a while back. And this is why I say this time it may be different, and my thinking is going to be different. So remember, guys, when we first kind of had our downward crash back in, I don't want to really call it a crash, but let me zoom out here, and there you go. In December, when we really kind of started falling out of bed, very similar to the action you're seeing right here. All right. Then we kind of dug in, we bounced, slopped around, seemed like forever, and finally, although not crazy volume, we finally went back to all-time highs. Well, back during January, and I talked about this a couple of months ago, all right, I want you to look at some of these global markets where they're at now. They're pretty much, every one of them are pretty much at the lows of the year or very, very close to the lows of the year. You got Qatar, and I don't know what's going on there. Must be all the oil or something, but they're holding up really well. Israel, not bad. But other than that, I want you to look at some of the major markets. And let me just kind of pull this out. There we go. Let's take a look at Germany. All right. Now, look here in January when we fell from grace. Look how high these market was then compared to where it is now, or compared to where it is. I want you to remember this area right here. This would be July. Okay, this is when the spiders in our markets, all of them, started heading back up, kind of broke through this pivot line that we're now up against and went higher and higher and higher. Now, picture this versus all these other markets during that same time. Okay, they failed to move higher. Not only did they fail to move higher, they went much, 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 much lower. Okay, so we have markets, worldwide markets that are pretty much in a major I don't know which ones are officially bear market. I have to say most of them are probably at this time. So, and not only that, you can just pull up the EEM as well, the emerging markets. Here we go. Here's January. Here is July when our markets decided to creep back to all-time highs. What did it keep doing? Just kept trending down and lower and lower and lower. Guys, you cannot ignore this, and I made the same comments a couple of months ago when we were hitting new highs. That is something that you have to pay attention to, and now it's staring us right at the face. I can't pull up any of these where you're going to find anything that looks like the spiders or the Qs or the Dow, for that matters, or the IWM. So, we're looking at pretty much some turmoil, across the world, and yet our markets were, trying to continue to go to highs. And I think you have to pay attention to that. And this is why I say it, guys, it may be different. Okay, we have been bouncing for years now. Buy the dip, buy the dip, buy the dip, buy the dip. Okay, this time I'm not so certain it's time to buy the dip. I mean, it's just that's my personal opinion. I'm seeing a lot of people out, like Jamie just mentioned. JC Peretz came out with an email. Really, he's actually thinking that we may have a crash. People that I respect in the industry really got the red flags waving, and I think you got to pay attention to that. And I wanted to talk about this because I'd mentioned it a while back, and this is kind of coming to fruition. It's still, obviously we're still the leader, been for a long time, but when you get this kind of deterioration throughout the world markets, you cannot help but affect what's going to happen here too as well.
Hey Andy, a couple of questions came in about
Sure.
that global market watcher there. Is that pointed to one of our predefined lists, or did you make that list yourself?
I made this list myself, and I'll be happy to share it.
Cool. Okay.
Yeah.
Yeah. So yeah, he'll drop it in the cloud. He'll drop that cloud
Sure
link
will.
in the chat for you, ladies and gentlemen, along with the custom list. That's a really great window, Andy. I like that.
Yeah. It bears keeping handy because a lot of I guarantee a lot of other traders, when the market was crashed, just kept ripping the highs. We're not keeping an eye on this, and if you were, maybe you would have got signs like, wait a minute, how strong is our market? Not seeing a lot of volume. We kind of took us forever to get back up here, and we're slopping around. So this would kind of give you an idea a lot of times. So yeah, I found it on iShares. Okay, it's iShares, and they have indices in there. There's a ton of them, guys. I only took about the top 41. I like the bigger ones there, but you can go to iShares if you want to add a bunch of more to it. Let me just put in here Global Market Watcher.
And while you're doing that, Andy, to Daniel's question, once you click on the cloud link, you'll be directed to a web page that tells you how to use that cloud link. So you should be able to figure it out pretty easily there. And of course, if you have any issues, you can always reach out.
Quick. Yeah. Okay. Daniel, I'll show you real quick. Yeah. You just click on that link that I dropped in there. The easiest thing to do is just copy the URL at the top. And then you can just go to File, Load from Cloud, The code will already be in there. All you have to do is hit load, and that should do it. See, I got 2 copies now. And if you wanted to, guys, you could add the US marking, add the spiders, whatever you want to do. These are all ETFs. You have to use ETFs.
Hey, you got everybody's curiosity up though, Andy. Go ahead and click on that UAE. Let's take a peek at that UAE chart real quick.
I see. Where's it is?
The green one, the only green one.
Oh yeah. Okay, that's well. Here's what happened. This was, I have it changed from the close for some reason. This one was up on the day.
Did I drop off or did Andy drop off?
You're on. He froze. Let's give him a moment. There he is.
Oh,
okay.
Yeah. Uh-oh.
You there, Andy?
Am I back? Am I back?
I believe you're back. There just seemed to be a little glitch in the matrix there.
It looks like I may be experiencing some internet issues, guys. So hopefully it'll come back and we'll get through this.
I think you're back for now. I speak too soon. All right, ladies and gentlemen, we're going to pause just for a moment, see if Andy makes it back.
Jamie?
Yes.
Hopefully I'm back now. If you lose me again, go ahead and take it and start going through Holly. It looks like I'm having some internet hiccups right now.
Okay.
But if I go away, just go ahead and steal it from me and go over Holly, and then we'll go from there. But hopefully it'll be okay for now.
Sounds good.
All right. As a matter of fact, that's that's pretty much the market recap. Just beware. I told my brother. Luckily, I got him out of a lot of his shares. Got him about 50% cash, and I'm trying to talk him into even getting out of more. But yeah, I mean, I'm not saying we're going to crash, but once again, the risk reward is just a very dangerous ratio right now for me. And all right, well, Jamie, let's go over.
Okay, well, it seems like Andy's popping out again, so I'm just going to grab the screen here, and hopefully somebody just shout out and let me know that they can see me and my multi-Holly screen here. And yes, Juan, this is in real time. This is not a recording, just for the record. Okay, thank you, Waleed.
All right, to Holly real quick.
Okay, you're back again, Andy. You dropped out on us again. Okay, so ladies and gentlemen.
All right, well.
Okay, there appears to be some kind of lag, Andy, so I'll just go ahead and power through some Holly stuff, and hopefully your connection stabilizes here in a moment. Okay, all right, okay. So what do we got here, ladies and gentlemen? Of course, something that we're not used to seeing in the past. I've got all 3 of the all trade blotters lined up here for the Holly trio, that being Holly Grail, Holly 2.0, and Holly Neo here. Now I've got one strategy panel up top, and of course we can pivot just by going to the different segments to see the strategies. But all the good stuff is typically in the trade blotter anyhow. Now what I've done here is I've went ahead and sorted each of these trade blotters by time, okay? So when the first trades were put on today, I guess the busiest module today, or no guessing to it, it was the original Holly. So first thing to point out today, of course, those of you who have heard me talk in my Monday webinar and just all throughout the webinars that we host, I'm a big believer in expectations. It's kind of important to know which way the wind's blowing, to know if you should even paddle out or just save your energy, or be very aggressive, or anything in between. So we had a lot of good things going on between what Holly was showing with her loading of short positions early on, plus a couple of other key metrics that I like to key off of. The second being a massive downside compare count after the first 15 minutes. Now, of course, it's not always immediate, but we can see here when we pull up the old SPY here, and we got the 15-minute candles. After the first 15-minute close, we took a little swoon up, but what was the biggest move of the day by far? And that was all Southern momentum here. A little bounce right here, and then the continuation. So seeing those compare count numbers, number one, ooh, all right, well, wouldn't surprise me, especially in the market that we've been in, as Andy was pointing out early as well, the supply that was up here, all right? So, you know, once we popped that little high and took this swoon down, the good thing is that Holly was loading the boat short the whole time. So here we are looking at the Grail trades, Holly 1.0, about 30 minutes into the open. Look what we got here. We got, boom, 1, 2, 3, 4 shorts. You know, not to be left out, squeeze a little long in there, and then boom, just more shorts. I mean, predominantly a short blotter today. And not just in the original Holly, but also 2.0. Got these sorted by time as well. Didn't get started quite as quickly as this one, but we can see predominantly shorts in the first 4 trades. This one did get a little bit more long than the other two. And then, of course, we've got Neo sorted by time as well, who got busy first to the punch at 8:53, about 23 minutes into the market with a long from, you know, this little cap here, but then boom, 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 boom. Okay, so a lot of loading to the short side right off the bat. Couple that with, you know, what we were seeing in the compare counts, and what a day it turned out to be. We had some pretty interesting equity curves here. This one's looking at Neo, so took a while before it found any traction, but it's all about what the AI is doing. Dan and I were talking about this the other day, and really, you know, from a statistical standpoint, it's like each and every day we're opening up our own little mini hedge fund, and it could be predominantly long like it was the other day when we had, I think, Andy, what is the best point total in any single day on that one green day. I mean, it was just massive, and it was just,
wow.
I don't even think there was one short on the blotter the other day, right? Maybe one.
Very few, yeah.
In any case, ladies and gentlemen, what these equity curves are showing us is that, you know, if you've got statistics on your side, every day opening up basically a mini hedge fund throughout the day, when you've got the statistics on your side, more times than not, things are starting to work out, right? It's just picking, you know, when you want to start unwinding things. But as far as what we do with Holly and looking at this data, I mean, we've sure got enough of it to look at today. There's something of everything going on today. Plenty of trade arounds, plenty of risk on. So let's just take a look at one of the risk on scenarios here. Bond shorty, it's been a while, Andy, since I saw bond shorty get active. But when it does get active, it typically does some good things. And of course, this was one of the first strategies that Mr. Michael Knopf ever contributed back in the day, bond shorty. You know, Bond being his Twitter name, Bonpara. So if you haven't been following Bonpara and you're on Twitter, go ahead and give him a follow. He likes to talk about a lot of robot stuff, a lot of automated trading. One of the in-house geniuses here. But check out the chart here. 15-minute candles. You know, obviously we got the opener right here, and then, you know, a nice signal from Holly. Not too far off the top here. Of course, bond shorty signaling that. Bond shorty on Neo today, and I believe I'm on Neo already. Oops. Let's look at bond shorty here. Do I just not have it expanded far enough? Okay. Okay, 2.0, pardon me. It was only fitting that it showed up in Neo because that's actually Michael's version of strategies down there. In any case, 62% chance coming into the session, anything out of bond shorty. So we get a nice little short signal here. The trade works, but as we typically like to say, Holly's strong suit is not her exits, right? Risk off exit, excuse me, I'm a little tongue-tied today. Why did it get out? It was the timed exit. Program for that hard stop right here that we can see for a 60-minute time hold, and she just does what she's programmed to do. But this pretty much fits for, well, it worked immediately, pretty good on the pain-free side. Come down to this little area right here. What does it do? Starts basing, putting in this little sideways action for a good 45 minutes. Well, a lot of the times Holly will peg out of one of these on a profit save, right? The move happened, now it's going sideways, it's not going the direction that we want it to anymore. So a lot of the times we'll see these, and a lot of the times they are on that profit save. But this one was just the timed hold, but you know, not too far of a stretch to go, man, this thing looks really nice. It's taking a little break before the seller hopefully comes back out. Of course, he did later on. So there's a couple of good things about what happens here. We can decide to stay in with Holly, take more risk, hope that there's a little bit more meat left on the bone. We could have used a break-even stop on this one and been perfectly fine, or you have the option to stick to your original stop. There's pros and cons to both. If we take profits with Holly on the first lot, keep that second lot for more, well, then we made more on the second lot. If we get stopped out and we have a break-even stop loss, we protect that first lot. If we stick to the hard stop, well, then we are putting that first lot in jeopardy. So that's kind of the way to think about these things, all right? But today, a break-even stop was getting the job done because a lot of these things weren't retracing a whole lot. So that's a great example of risk on, and the spread between risk off and risk on here, a whopping 72 cents, right? So whether you got 20 or 30 or 40, or whether you got lucky and pegged the bottom, you know, there's a lot of room, a lot of leeway in there. All right. And then of course, right below the next trade down is RHI from the downward momentum on 2.0. Downward momentum, slightly under 60% coming into the session, but nothing to sneeze at. Looks very similar, you know, not quite near the top as the LTXB entry, but this one, an immediate stop out. And we look at the trade time here, 11:18, was only in the trade for approximately 8 minutes. Just got a little pushback from that one, and then an immediate stop out. But here's the kicker, and here's the way that I like to view things. If we look at the trade count over here, which is 45, 65, 64 total trades, that's out of over 7,500 potential symbols that could have been triggered by trade ideas at the start of the session. That's not a very big percentage, ladies and gentlemen. So even when you see Holly get stopped out, because this happened pretty quickly, maybe you were in this trade, maybe you just saw it get stopped out, but you should always add it to your watch list, all right? Because when you see this extra little 30-minute period here and it's just not even wicking up there, that could be a signal to take the trade, all right? Because obviously, unless you're auto trading, which, you know, even when we launched Brokerage Plus, probably a very small percentage of the community that uses that tool is just going to be like, yeah, I'm taking everything. And that just depends, you know, because of risk tolerance, account size, right? There's only going to be, you know, a smaller percentage of people that actually become that aggressive, but there will be those people. So unless you're one of those people, then this can act as just an additional high quality generator. The only reason that you saw this is because Holly got stopped out, right? And then you saw it going sideways, said, hey, it's pretty low risk now. I can get a better price, perhaps. And you took that trade and you got that alpha there. So that's what we'd refer to as a trade around. Once you see Holly get stopped out or it's approaching the stop loss, a lot of the times those will act as little, you know, pivot levels that we can key off of. All right, so that's all that's going on with Neo there. Let's just move on to one of the other modules, and I won't hog up all the time here, Andy, I promise. A couple of more.
Well, I was gonna say this, Jamie. Mine's still kind of going in and out my internet. So feel free to talk another 5 or 10 minutes. I just want to make I'd feel comfortable with that once I made sure it's working good.
Yeah, no worries, no worries. Okay, so let's look at, let's see here. ALSN was another good one.
Yeah.
Okay, there we go. Thank you for giving me my screen. ALSN, timed exit. So we got the Holly signal right here in this candle. look what happens. I mean, just the same thing over and over here. We get the little sideways action. And I forgot to mention this on the other trade as well, but I really love it when we get these types of signals because it allows us to really leverage the position once we get used to seeing this simple little pattern here. And today, these were all over the place. Now, this is a Holly trade, but if you've read our ebook, okay, you'll see my section in there is dealing exactly with this type of pattern that we're seeing right here. So Holly calls it because of the statistical probability, then it just happens to play out like this. But this is a really great opportunity to leverage because when we get over here and we get this break, this opening range break is range is broken, well, you see what happens. And it's a nice clean entry with very little risk in place if you wanted to tack on top of your Holly position. You know, a lot of people just do little feeler trades. You know, you get a little skin in the game, you're going to pay a lot more attention. Whether, you know, a little skin in the game is going to vary depending on what type of trader you are, how big the account is. To some people, that can be a 100-share lot. To other people, it's whatever, $1,000 will buy, right? But believe me, once you get a little bit of skin in the game and you've got a little bit of actual blotter, real money blotter up there, you're going to really pay attention to these things, and you're not going to miss the opportunity to leverage an already highly probable trade from Holly and into something that can pay a lot more dividends with a lot less additional risk. All right. Okay, so let me just check out the questions panel here. Watch this tool. Well, Tony, I don't really, I think I understand your question there. A watch list tool to have more than one or categories that can be split. You can build lots of different symbol lists here, and you can have all different types of windows pointing to them. So if you'd like to get a little bit more specific, perhaps I can address that further. All right, so we do have a question coming in that's Holly related. Under the trade size option within Holly, there are 3 choices: size, stop loss, how Holly chooses the other 2 parameters. Okay, well, what John is referring to is if I go to tools and options, we have added a new panel over here, AI trade size. So right now you see I have it set on the way that Holly displays by default and the way she has been displaying up until the point that we're giving you the option to display differently. So right now it's just on, you know, a default of 1 share per trade. Now if I went to 100 shares, you're going to see all of these numbers here change to reflect what I would have made or lost trading a 100-share lot. All right. However, and of course, we could also dictate a dollar amount by saying, you know what, all we want to do is put in as many shares as $2,000 would buy us, and the system's automatically going to adjust for the proper amount of shares, as you can see here in the shares column. And of course, all the risk on, risk off numbers will be reflected. Oops. The third one is based on, you know, if you wanted to risk a certain amount per trade. Now, of course, it might help or hurt the performance on any given day because these strategies are all designed around very specific exit criteria, right? But this is more for informational purposes so that you can see what happens. Okay, if I risk $200 per trade, how would things have panned out today, right? Risk off, risk on. That's really just an informational addition that we've added in there because a lot of people like to see that type of information. But keep in mind, you know, if you say, I want to risk $200 on a day, then depending on, you know, what happens with the Holly modules, you may have lost more or made more just depending on the action for that day. Andy, anything to add?
No, you're exactly right. I really like the lower one where you base it based upon risk, how much you want to risk per trade, because that way you're keeping the stop alive. What you never want to do is just pick a stop only based on monetary reasons alone. You want it to be some sort of a technical or some algo like we have that sets the stop for us. which is what does include technical information. And so that's what you want to do. And by doing this, is you're keeping the stop the same. You're just adjusting the share size based on how much you want to lose.
Correct. And to your question there, John, how does Holly know how much or how many shares to trade based on your risk? Well, you can put it on whatever you'd like here. She's going to reflect whatever you put in here. If you only want to allocate in watching Holly $1,000 per trade, then she'll get you as many shares as $1,000 would buy. Or you can use a share amount, or you can go risk-based, okay? So that's the way that the three metrics work. In the past, up until we made this panel, it was just showing us what would happen if Holly was in one share of everything. You know, of course, it's easy for us old trader guys to go, well, $1.23. If you're in one share, then you literally made $1.23. But if you were in 100 shares, that's $123, right? If you were in 1,000 shares, $1,230. Well, now you don't have to try to make those calculations, especially if you're new to this game. It's not going to be second nature, and that's why we've made the new panel where you can dictate. So, you know, 100 shares, $1,000, or I want to risk X amount per trade. So I hope that helps clarify the situation there. All right, Andy, are you stable?
Thanks. Yeah, thanks, Jamie. I appreciate you taking over there.
No worries. Let me kick it back over to
All
you.
right.
And hopefully, did you get any thunder over there? Was that what was happening, or was it just
No,
totally unrelated?
I'm not sure what it is. I was getting some hiccups. I'm surprised it didn't go totally down, but it's just getting hiccups. And guys, I'm going to power forward. But if for any reason I do start to lose again, I'm just going to ask Scott, you know, Jamie, if you'll just notify Scott to come back in, and he'll sign us off, and I'll save this for the next one. But let's go ahead and see if we can get through this. All right, so this topic is, you know, chance, you know, favors a prepared mind. And what I mean by that is I'm not one that likes to have preconceived notions coming in, you know, but obviously I think it's good to do your homework and understand where the market is, and how you can set up your alerts based upon the most probable you know, actions, price action in the market. And I'm going to tell you, let's take a look at our spiders coming into the day. All right, guys, obviously we've been in a bull market for a very long time, but let's face it, the action here we've seen over the last few weeks has been anything but bullish. We did have one great day back here, but we've already erased that day. So coming into the day, you know, what I mean by a prepared mind is what you're looking at is a stock market that's sold off on some really huge volume, and then bounce back up on less volume right to a very important pivot level, and also a downward sloping 10-period moving average. So if I'm coming in and I'm looking this, you know, at you know, on a doji, I want to come in saying to myself, okay, what is most likely to transpire in the market today based upon what we call footprints in the sand? What's the market telling us? Well, it's telling me the chances of going lower are much greater than going higher. And the reason is just looking once again at the footprints in the sand. We've sold off hard. Now we bounced back a few days, and we're coming right into a critical momentum, a fast line we like to call it, that can really you know, push the momentum in the same direction from whence it came. So and that's what we had coming into the day. So you have to be thinking, you know what, this is where I may need to put that short, you know, get the short arrows out, you know, reach in my quiver and grab a few short strategies, because I want to be prepared if it does, if we do sell off, continue our sell off. And that's what happened today. And the way you could do that, first of all, you can build short strategies. We shared many of them here before. You can find some in channel 4. Or guys, if you do have a bullish, like a top list or an alert window, you can do what's called flipping it. And you've seen us do that before in here. And I'm going to give you an example using my pullback above 50 SMA Pro. This is a configuration, a bullish configuration, looking for stocks pulling back. Come on, baby. Pulling back on a 5-day time frame. That's why I got position in 5-day range, max 25%. I want it in the lower quadrant of that 5-day range, but it needs to be above its 50-period moving average. Okay, and it needs to have position in range. It needs to have a really bullish day to day. Try to sell off further and bounce back. So now I can take this, and what I'm going to do is I'm going to duplicate this window, and I'm going to flip it. We're just going to take it, and we're going to configure, and we're going to flip. And watch what happens, guys. We're basically turning all these filters around, okay? And I'll tell you what I'm going to do so we just get more data in here. I'm going to open up that filters to 300,000 shares. Okay. Uh-oh, now I got to flip it. All right. And let's go look back to yesterday's close. That's the beautiful thing about top lists. They will freeze if you have them set for live during market hours. They will freeze at the close. So what we can do is use historical date, and we can go back to the close of yesterday. I'm actually going to put 255 in here because it covers a 5-minute time frame when you look back in history on these top lists. And go back to yesterday at the close. All right. So let's take a look at some of these charts. And this is what I'm talking about. If you're coming in looking at this and you're doing your nightly homework and you flip something around like this, you are going to be prepared for the next day if we have a sell-off. That doesn't mean this is all you're looking at. But if you get this kind of price action where we gap down and we try to fill the gap, don't even get it really close, and then start rolling back over, now you're prepared with these alerts. Because what you can do when you're doing your nightly homework is you can just set price alerts. Just put them in there, and then that way when they trigger, you're ready to take action. But I want you to look at all these setups. Okay, it's just the opposite of this one. Okay, these are stocks that are down and bouncing up and running and still below. Now they're below their 50-period moving average. Remember, we flipped that whole top list. And just some beautiful setups in here, guys, where you're looking for it to break that low and you're getting short and you're just kind of riding the momentum down. See if we can find some more. There's a good one there. I think what you're going to see if you go through here is you're going to pretty much in a day like today, you're going to just see one good trade after the other. There's actually a gap and go right there. Nano, Farm. There's a good one. Pretty much open right at the low of yesterday and just basically sold off all day. This is a beautiful one right here, if I remember correctly. There's a great one. Just weak, huge volume, a couple of days bounces, then a gap up yesterday and sold off, and then look at this follow through action today. You would have got short right at yesterday's low, and just look at all that nice momentum you'd have to the downside. There's no real losing trades in this. And that doesn't mean we can still, the market could have obviously gapped up and or gapped lower. Maybe it just kept going. Well, in that case, what happened is a lot of these would not trigger because a lot of these stocks are going to be following the market. If the market's going higher, maybe they don't roll over and take out yesterday's lows. But it's great guys to be prepared, and this is a way that you can do that. And I strongly suggest when you're doing your nightly homework, look for setups like this in the overall market, because that can help you create alerts to benefit on the day, moving forward. It's very similar if the spiders may have had a pullback in the past, to a level that looked good. Try to find an example. Maybe right here was setting up right here. Maybe on a day like this, maybe you would come in here and say, wow, if we get above this level right here, it's going to be really, it could be a really good day. It's breaking a pivot line over here, failed head and shoulders, that could be very strong. So when you see setups like this in the market, okay, and you're doing your homework, what you want to do is prepare yourself for what is the most likely scenario that's going to happen in the marketplace based upon my studying of my charts. And then you can create or use your alerts that you already have, or create some new ones to help you benefit in the best case scenario. So I hope that makes sense. The flip feature is really nice, and And like I said, this software is powerful, but it's only going to be as good as the one using it. And that's why it's important for you to learn it as best you can. And guys, I'm serious, you can set up things that can really help you profit in the marketplace. But that's about it, Jamie. I hope I didn't lag any. I hope my internet was okay.
No, you were good the remainder of the time. Real quick here, I think we were about to do this before you started having connection issues, but would you mind grabbing that list for the global top list and dropping that, I think, what'd you say, 40 different symbols in there?
They want the symbols, huh?
Correct,
okay.
Correct.
All right, that's right. That would help. Okay.
So I was just going to say to John, yeah, it'll come up blank because you don't have the custom list, which Andy's about to drop into the chat. So you can just go in there and create a custom list, drop these symbols in, then point the window to that list, and you should be good to go.
Yep. Thank you. I forgot all about that. You do have to have this list. So what I'm going to do now is drop the list in there. So make sure you guys copy and paste this before we sign off, or you will not have this list. But once again, if you go to iShares account, you can find this under indices, I believe. Remember, iShares are all ETFs, so we do track ETFs in here. We do not track indices, so you want to make sure you're getting the ETFs. You're welcome, Wally. Yeah, this could be a handy little tool. I created this for professionals, but I'm kind of liking it myself. All right, guys. Well, I tell you what, I'm going to go ahead and bring Scott in, unless you have anything else to add, Jamie.
Oh, I think we're all good, Andy.
All right.
Bit of trivia.
Sure.
Tomorrow is October 19th, which just happened to be the crash of '87 was the 19th.
Oh.
Except it was on a Monday.
And so what anniversary would this be? Looks like
31 years, I believe.
Okay.
Yeah. Now, just a bit of trivia that I've found interesting.
Yeah. Especially after all this bearish talk, And
of course, it was Dan who brought it to my attention. So just interesting stuff. It is the anniversary. Whether anything happens or not is probably just beside the point.
Yeah.
But it sure is interesting timing with where we are in the market. Right?
Once again, it's nice to be prepared. You never know.
Okay, that's all I got.
Well, I was glad we're finally, my connection finally started acting okay, and we finally got through this. But just in case it starts to mess up again, I'm going to go ahead and bring Scott in to walk us out of here. So, Scott, if you'll come on in, let's see.
All right, thank you. Yeah, so a couple items on the way out. The event is sold out in person, but you can attend virtually and get access to the videos when they're produced. Trade-ideas.com/livestream. Just go there and register. You'll get an update, and we should be sending out the YouTube URL where you'll be able to watch it live on Saturday tomorrow, so you can bookmark that. And, of course, we'll remind you when it actually starts and all that kind of good stuff. It's going to start at 9 a.m. Pacific on Saturday, and there's a lot of great speakers, so don't miss out. If you can't watch it live the whole day, you can tune in for various segments, and then watch the replay that's going to be available immediately when the event is done, or just wait until we actually produce the videos and have those out in about a week. But if you sign up for this, you will be notified before anyone else. We also have a test drive coming up on the 29th. So shortly after this event, we're going to do the test drive, and that's a 5-day trial of Trade Ideas Premium. Go to trade-ideas.com/test drive to learn more. It costs $8.88 to join for 5 days. That covers our exchange fees because we do have to pay for all the real-time accounts to the exchanges. And we're going to have special webinars and training sessions all week long. So feel free. So make sure that you are signed up for that if you're not yet a premium member. Those of you that are standard members can also experience premium by signing up for the test drive. It will not affect your subscription, but you'll be able to try out premium. Go to trade-ideas.com/ebook to get a very timely book. We released it in February, and those of you that have had access to the book have probably found it useful in the market since then. 5 ways to win in a post-BTFD market. Markets are choppy, so make sure you've got these strategies. Both Andy and Jamie contributed chapters to it. It's really good. check it out. We have a podcast. We're going to have a special episode tomorrow. We've got one of our sponsors from Speed Trader on, speaking with Sean McLaughlin. So make sure you search for Trade Ideas Podcast in whatever app you use to listen to podcasts and hit the subscribe button. That way, as soon as we post it, you'll get it. And you'll get all the new episodes as they come out, and you can also cruise through and read the descriptions of the previously released episodes and download and listen to any of those you want to as well. They're all available. We've got a code this month. Just use Alpha Studio, all caps, when you do a checkout to save 15% off your first month or year of Trade Ideas if you're starting a subscription. Those of you who want to upgrade from standard to premium can apply this as well and save too. So if you have any questions, email us info@trade-ideas.com. You can follow Jamie on Twitter at QuantBot. Steve Gomez is at Today Trader. We also have @TradeIdeas. Facebook.com/TradeIdeasPro is the page to like on Facebook so that you can share what we post with your buddies. Thanks, Jamie. Thanks, Andy. I think I'm seeing both of you tomorrow. So
that is true.
Yeah. All right. Well,
great, man.
See
you then, Scott.
Yeah. Cheers, guys, and thanks everyone for attending. Bye.
Thanks, everybody.
Bye-bye.
Bye-bye.